Beware tech M&A perfection and 2 yards in a cloud of dust investing. Tech investment banking has a lot of myths and misperceptions that are hurting your chances for a successful exit, what we call the optimal outcome. Today, we'll talk about two of them. One, the perfection syndrome, and two, what I call the 2 yards in a cloud of dust investment strategy. The perfection problem revolves around the notion that when I get pretty enough, Prince Charming will come a-calling. Or if I build it, they will come, referring to the whole idea that companies are bought, not sold. First off, the whole notion of the buyer calling when you're perfectly ready is nonsense. Usually that call is not from Prince Charming, but some toad trying to buy you cheap. Don't fall for it. And don't obsess on only being able to sell when you're finally pretty. The reality is that markets determine when you will sell. So pay attention or you'll miss the window. And it might not be when you're fully blossomed. So be wary of perfection. The second but related trend is to take the sure path, like the running game in American football, gaining a few yards at a time, but steadily downfield. With this strategy, the entrepreneur finances, grows a bit, does another round of financing, grows, finances some more at an even higher price. You get the idea. The strategy is good for those who make a commission on each new funding round, but not good for the founders who keep getting diluted, unable to sell, as they're tied up trying to please the newest investors with ever higher return expectations. With a chill in IPOs, they're not going to be able to get out, priced even too high for strategic buyers. We see this strategy a lot in Asia. In the age of bolt-ons, where PE-backed platforms established for market consolidations are gobbling up everything in sight, buying companies of any size everywhere, founders now have a better option. They can sell at even the earliest point, getting a greater share rather than constantly signing up for yet another round to reach the goalposts, which keep moving off in the distance with each new financing. Look, fully 80% of all tech M&A transactions now are bolt-ons, or what buyers sometimes call add-ins or tuck-ins. Since buyers today have so much cash and are concerned about inflation, they are willing to go after even the smallest company with good tech, casting an ever wider net globally. The really good news? These small transactions are usually for all cash. Don't let these two merger myths keep you from taking advantage of today's hot tech M&A market and getting what you deserve, that optimal outcome.